welcome to live sessions presented by HDFC Life in partnership with ET Now. I'm Kavita Thapliyal. Life is a journey of evolving milestones, starting a career, building a family, purchasing a home, creating wealth, and ultimately planning a secure retirement. At every stage, financial responsibilities change, but one constant remains: the need for protection and preparedness. In this episode, we explore how HDFC Life, together with RBL Bank, is helping customers navigate this journey with confidence, ensuring that life insurance is not just a product, but a partner for every stage of life. Joining us today are two leaders who bring complementary perspectives: Mr. Sanjiv Roy, Head Affluent Banking, Wealth Management and Fee Products, RBL Bank, and Mr. Vijay Vaidyanathan, Group Head, Key Alliances, HDFC Life, to discuss how insurance can truly become universal, inclusive and deeply personal. Welcome to the show, both of you. And let's start with the basics. Let's start with when you get the first salary, your first paycheck. Mr. Vaidyanathan, what happens is, you are having an aspirational life. You want to earn and you want to splurge and you want to spend, and you've got a bucket list of things that you want to do with your first paycheck. Insurance takes a backseat. No one really thinks about insurance, when they get the first salary. Time to change the narrative. How can we think about it from the first day itself? When you start working, you need to have your goals aligned, and the very first thing you need to do is protect yourself.
Absolutely. So, Kavita, see, let me start with some numbers.
Sure.
We all know that the Indian demographic is such that we have probably in the world one of the largest insurable young population, but still very, very low insurance penetration. We are at hardly 3.2% insurance penetration. Why is that happening? Because constantly, like you're saying, the preference is getting pushed back. People probably think it's too early for me to think about insurance. But there is a very sound reason why that should not be the case. Let me give you some pointers. For example, if you start early, you're going to lock yourself in at very, very low premium rates. You have today the option of taking life insurance contracts for very, very long term. You can take coverage even in the 20s, a life policy that covers you up to the age of 85. And so if you lock yourself in at early rates, at smaller rates, you're going to actually benefit in terms of premiums. Just to give you some sense, for every 5 years of delay you make in taking a life insurance policy, your premiums are going to go up by almost 25 to 30%. And that is now going to be for the lifetime of your contract. Okay. Wow. Now add to that the benefit of power of compounding. Power of compounding, we all know how it works. The earlier you start, the more disciplined you are, you're going to benefit from compounding. And insurance is again one of the best avenues for financial discipline, because you can start early. It's a product where you know that you will have to be disciplined. You cannot stop paying premiums midway through because you're going to lose out as a customer. So it really is a product that forces you to be disciplined in your savings over the long term. So in all aspects, it is definitely an asset that you create from day one with protection, and also start with a small amount of financial discipline. So it really is something that we should change the narrative and think about starting early.
But Mr. Roy, taking the journey ahead and talking about building a family, how can banks and insurers, reposition the entire narrative around insurance as a core financial tool complementing banking products, so that customers see it as a natural and essential part of their banking portfolio, financial portfolio?
Yeah, Kavita, thank you for that question. See, first of all, we have to understand why a customer typically comes to a bank. And I have a very simple thought around this. This is a concept, protect and prosper. And I'll expound on this. A customer typically comes to a bank to protect what he has already earned, he or she has already earned, or prosper further and grow his earnings. Now, all the banking products that you see, whether it is locker, whether it is savings account, whether it is loans, or cards, would cater towards all of this. Now, what is missing in banking is to be able to protect your savings from eventualities or uncertainties of life, health, which is where insurance becomes a complementary product to banking products. So I can offer a customer, I can offer you a locker for protecting your jewelry. as a bank, but I cannot offer you, I don't have the license to offer you a product which takes care of your hospitalization expenses.
Okay.
And God forbid if something happens to your dependents, are left in lurch, I cannot offer you sum assured, I cannot offer you a term, which is where the insurance companies and the banks come up together, they provide us the product and we go and offer it to our customers.
Okay.
So it's really, really complementary because it really caters to the need, fundamental needs of the customer for which the customer comes to the bank.
But then, as you rightly pointed out, it's growing India, it's aspiring India, and we are seeing a lot of changes in our needs and wants. How can you fit in insurance in every stage of your life with such growing aspirations and, with so much of a young India demanding and wanting to be something? So how can insurance fit in with the different dynamics of youngsters and customers?
No, you're 100% right. In fact, now the families are shrinking. You're having smaller nuclear families. The personal disposable income for per family is growing.
Absolutely.
So the financial planning needs themselves have become more aspirational in nature, right? People want to send their kids abroad for international education. People want a second home. People want early retirement. They want international holidays every year. So the planning needs themselves have changed and they have evolved. So the products that are available to cater to these needs also have evolved over a period of time. Now, if you look at insurance, for example, you have insurance-linked investments, you have guaranteed products that provide more stable returns over the period of the investment. And you have participating products which provide bonus linked savings. So whether it is the wealth preservation that Sanjiv was talking about, wealth conservation or wealth accumulation, all these needs can get catered to by looking at different types of investment solutions from the insurance portfolio to cater to these different aspirational needs of the customer.
All right, but then are we also talking about having tailor-made products, because we are dealing with different sectors and different segments of societies, for a business class or maybe someone like an MSME, they would need financial security and they would need to do something more, with safeguarding their personal family as well, but then also looking at their business insurance aspect. So how are we talking about these segments? Do we have tailor-made solution or insurance portfolios, if I can call them, for different categories?
So we at RBL Bank, Kavita, look at our MSME customers as an important pivotal part of our business.
Sure.
And for that, it's important that we don't look at that customer only with a one dimension of that customer having a family. He or she has a business, which is what runs the family. So we need to give him or her the solutions which takes care of any eventuality or any incident that can happen to that customer, which may cause damage to the business. The biggest risk that the business runs is that of the owner of the business itself. So we have keyman insurance, we have term insurance, which takes care of the fact, and employee insurance, which can take care of the fact that anything happens to the promoters of the business, the business keeps running, or the kith and kin is taken care of.
Okay.
Similarly, for what we look at, this is coming from the stable of our life insurance companies, but we also have partnerships with general insurance companies and health insurance companies.
Okay.
So a businessman may have a stock, may have a factory, may have a godown, may have a restaurant. We give them fire insurance so that it takes care of the fact that if something happened to that asset, the asset is taken care of. And the health insurance covers the employee, the founder or the promoter, if something happens to that person from a morbidity perspective, he gets hospitalized, etc. So his income does not get damaged. So it's a 360-degree chakra, as I call it, from a protection perspective, that protect his business, protect him and protect his family. That's where insurance comes in.
All right. So let's elaborate more on the future stability that one might want, the retirement being a major concern and a very huge financial goal of your life as well, your life goals. And often in India, people start thinking about it post 40. Traditionally, now the definition of retirement is also changing, as, Mr. Vaidyanathan also highlighted. But having said that, child education, your own retirement. So how does life insurance actually helps you in these kind of stages, especially when you have financial responsibilities, and also, takes care of it when you are not there?
So, we who are part of this insurance journey for a long time, we say there are only two risks in life. one is dying early, another is living too long.
That's right.
In either situation, you need insurance.
You need insurance.
So if you die too early and you have dependents, the dependents are left in the lurch, and hence you need insurance to provide for them. Hopefully, with better medical care, people getting more conscious about their health, etc. The mortality ages have only gone up, so people are living longer,
People are
right?
living longer, yeah.
Living longer in a country which is also having a good inflation coming up, and the highest inflation is in the education and the medical side. So as you live longer, your cost of medicals go up significantly. So you need a kitty which provides for that monthly expense towards your doctors and towards your medicines and towards your hospitals. And hence you need to provide for this by having a good pension plan, and starting early is the best idea, like Vijay was already talking about. So it is not that when you are in 40 you start planning, you think retirement. You should think retirement when you are in 30s, because nowadays a lot of us have aspirations, particularly with all the corporate stress that we get, that why work till 60? Why not do it earlier? And that the only reason why you cannot take that decision is whether your corpus is good enough or not.
Yeah.
And if you have a good retirement policy, if you have taken a good pension plan or multiple pension plans, it ensures that gives you that comfort that you can retire because you know the assured monthly income that you'll get from it. Coupled with that, you need a good health plan as well, because that health plan will complement the income plan that will come with this. So, summarizing, whether you are young, whether you are in the middle of your life, whether it is people with young kids just married, or whether you are going towards a little higher age where you are now starting to think about your responsibilities getting over, etc. The good thing is that between all the insurance products, they take care of all the aspects and all your stages of life.
All right.
So that's the beauty of this product line.
All right. So, but then how are the products aligned if you're someone who's, closer to retirement, income stability and legacy planning becomes your priority? How can one go about it by different insurance products, talking about annuities and pensions? How to go around it?
So to start off with, again, we need to understand that formal pension schemes today only cover about 20% of the working population. So it's grossly inadequate. And a large portion is completely not covered from any formal scheme. So insurance-led annuity or pension planning plays a very, very pivotal role in this. What are all the options that are available? So like you rightly mentioned, there are annuity plans, there are pension plans which provide very stable, guaranteed, fixed returns for the lifetime of the annuitant or the pensioner, which today you do not get from any other product. So that gives peace of mind, that gives a stable income. You also now have options of getting into participating products at a later stage of your life when you're closing in on retirement, which allows for certain amount of equity participation, but it's more operating like a balance managed fund. So you get a little bit of debt, you get a little bit of equity, and you participate in how the product performs. So you get bonuses depending on how it performs. And then you have the whole life or estate planning solutions that are meant as legacy planning solutions. Allows you to provide a tax-free inheritance or tax-efficient inheritance for your loved ones, and in a very easy manner without any problems of conflict for the next generation. And then, like Sanjiv mentioned, you can add on health riders to these solutions to take care of any critical illness or health complications that might come up at a later stage of your life. So whether it is whole life or estate planning solutions or fixed return annuity pension solutions, and to top up some riders on the health side, takes care of the entire gamut of your closer to and post retirement life.
Right. So this is like a draft or necessary coverages that you need, but apart from that, it's situation or case specific as well. You might need some more extra covers or some more add-on depending on what stage of life and what kind of financial situation are you in. All right. But then to sum it up all, and one last question to both of you, I really want to understand how can we improve or get better in banker-customer relationship, keeping the goal of insurance for all 2047. So how would you like to elaborate on this?
Yeah. See, insurance for all by 2047 is not possible without banks participating in it.
True.
There is no formal distribution in this country which actually reaches the nooks and corners of this country with a structured institutional setup. Banks provide that across top large banks and all the other mid-sized private sector and old public sector banks. You have lakhs and lakhs of branches. So you're practically reaching every nook and corner of the country. So when anything is for all, the first thing we need to think about is the reach. Second is banks are in a unique situation to also know its customers better than most other BFSI entities would. Insurance companies will know their customers only to the extent of the customer's behavior with respect to the insurance product. We actually have visibility across products, because when you take a credit card from me, I know your transaction behavior. When you are buying a baby product, I know that your family has had a new entrant of babies. So I can actually use intelligent data to target and give you the right product nudges. And that puts banks in a very unique position to create the right kind of pitches and give the right products to its customers along and powered by the ecosystem of the partners that it has. So I don't see a situation where we can achieve this dream of insurance for all by 2047 without active participation of banks.
All right. What about you?
So I completely echo Sanjeev's thoughts here. It's impossible for us to achieve this goal without collaborating together as banks and insurance companies. Apart from the points that Sanjeev mentioned about reach and about trust, a lot of times, if I have to go back to my first answer, the first touch point for a customer is when he or she opens a bank account. When they're joining a job and they get their first salary, their first touch point is a bank. So if we have to start early, we are going to depend on a bank to get us to reach that customer.
Absolutely.
Right? Also, many new initiatives, like for example, the PMJJBY that the government has started, is again while opening a bank account. So that's when we get a broader coverage to lot number of customers using the bank vehicle. The bank also has multiple touch points like a mobile banking app or net banking, where we already, for example, HDFC Life and RBL very closely work together to provide different customizable solutions to different segments of customers based on the touch point through which we are reaching out to them. We are also closely collaborating and working on the technology aspect and the data aspect to mine data and see which customer could be positioned, which kind of product, what would be most valuable and ideal for them at the life stage in which they reside right now. All this will only happen through constant collaboration, right? And the last point I want to make is, obviously, the Honorable Prime Minister and Finance Minister have come up with this GST bonanza, and life insurance is also a beneficiary of this bonanza, right? And it's clearly with the objective of meeting a higher level of insurance penetration and insurance for all by 2047. I have no doubt in my mind that this is not going to be possible unless banks and insurance companies together bring this message down to the end customer.
Absolutely. Okay, so that's the aim for 2047, and with that, it's time up on the show as well. Thank you so much for joining us for this very insightful edition of live sessions presented by HDFC Life in partnership with ET Now. Today, we explored how life insurance is not just a financial product but a trusted partner, supporting every stage of life's journey. As our guests reminded us, the future of protection lies in accessibility, innovation, and inclusivity, making insurance a natural part of every financial portfolio. And with the shared vision of insurance for all, by 2047, we move closer to a future where every Indian household is financially secure. Until next time, remember, financial preparedness isn't a milestone, it's a lifelong journey. Stay protected, stay future ready.